Hey, good afternoon, everyone.
Good afternoon,
Afternoon,
Professor.
everybody. Hi,
Hi, Professor.
Aura. Hi, Khalid.
How are you?
So looks like we have seven people here, and then in the discussion board, let's take a look at the discussion board. Oops, it's not going to discussion board. So manual. I have six people in the discussion board, right, except myself. So one person here hasn't signed into today's forum. But please remember, so please remember, right? The first order of business is always to go to today's forum and report attendance because without this, your attendance is not validated. Please validate your attendance, right? Whoever isn't still there, please, validate your attendance. Okay. All righty. So,
Professor,
yeah, yeah,
before we,
yeah,
before we start the class, I actually have a question.
yeah.
I was trying to do the Connect assignment that's due on the
Hmm.
8th,
Hmm.
and immediately from the beginning I'm having trouble because I don't know how to calculate the marginal tax rate. And
Oh,
I know you might have covered it in the class, but I would just like some review if you don't mind.
okay. Um, First of all, marginal tax rate is, I will have to bring another file. I'll have to bring up another file, but
Thank you.
okay. Marginal tax rate is the tax rate that applies beyond. So it's easier to explain with the example.
Uh-huh.
Um, so, for example, this is actual 2018 income tax bracket, right?
Okay.
2018, because there was a tax code, tax rate change in 2018. Actually, Donald Trump, and Republicans, pushed through this tax rate change in 2018, and
Mm,
it was actually not very helping, not very much, the middle class or lower class, middle income class or lower income class, but it actually only helped the top 1% and the large corporations. Um, so, for example, if you are filing taxes as individual, right? This is the
yeah.
tax bracket, right?
Yes.
Uh, so if you're making, if you're making anywhere between $0 to $19,000, then uh, you pay 10%. And if you're making, for example, in this example, if your taxable income is 77,000, right?
Okay.
You you fall into uh, these two brackets only, right? Because that's your taxable income, and your taxable income doesn't exceed the upper bound for 15% bracket, right?
Okay.
So you will pay 10% for the first bracket, right? And
Yeah.
for your second bracket, which is the difference between this and this, right?
Yeah.
Uh, that will be about, I would say, that will be about $50,000. For $50,000, for that portion, you pay 15%, and you won't be subject to, the rest of them.
Further
Um,
tax.
so yeah, so your top tax rate is 15%. That's your top tax rate. And then if you made actually, suppose you made 77,401. If you
Uh-huh.
made 77,401, then that $1, I mean, 20, what, that $1 will fall into 25% bracket, right?
Wow. Wow.
Yeah, so 25 cents of that $1 will be taxed. Okay?
Yeah.
You understand? That is
Yeah.
called marginal tax rate. That's called marginal tax rate. In other words, as you uh, your income is, marginally below your income, your taxable income is marginally below this. But if it is marginally above that, right? Marginal means if you are inching up, right? Marginally, if you're inching up, if your income is, going up marginally, and it broke through. If your income breaks through this upper bound and um, breaks into this bracket, then from that point, right? It will be if you make one more dollar. If you make one more dollar, but even in this example, even if you make one more dollar, even if
Yeah.
you make one more dollar, your marginal tax rate is still 15% then. Isn't it
Okay.
right?
Yeah.
Right? Until you make more than this, your marginal tax rate won't be 25%. Make
So
sense?
so yeah, so to calculate a marginal tax rate on a income, for example, you would just add 15%?
You would have to go through every tax bracket that you are, that you're applicable for, right? Your income is applicable for, right? You understand?
Yeah.
So if this is your taxable, let's say if your taxable income is somewhere like um, if your taxable income is 1600 for 1604.50. Well, then you are, going through a 10%, 15%, 25% bracket. But if you make one more dollar, right? If you make one more dollar,
Yeah.
we assume 1600, 450. One more dollar will make it just 1600, 451. Still, your marginal tax rate is 25%, right?
Mm. Yeah.
So uh, to find your marginal tax rate, you'll need to calculate, you'll need to find all, I mean, you don't have to calculate anything. I mean, as long as you know what your taxable income is, you would know, oh, if my taxable income is like this, I would fall into this bracket, I would fall into this bracket, but I won't fall into this bracket. But even in this bracket, um, if I make one more dollar, I won't breach this bracket. I will still be in this bracket. So your marginal tax rate is still 15%.
Okay. So let's
Okay?
say, for example, let's say, for example, I know my taxable income and it's
Uh-huh.
50,000. Okay?
50,000.
So
Yeah,
all
50,000.
I all I would do is find which bracket I'm under. So it would
Yeah,
be under
if you're
50.
yeah, yeah, if it is
So it would be
50,000,
under
first,
50%.
yeah,
And
first
then all I
you'll pay
do,
10% and then 15% and no more than that because
uh-huh.
your taxable income is 50,000, right?
Yeah. Yeah.
You pay no more
So
than this, and then even if you make one more dollar, it still falls into 15% bracket. That's the
okay.
marginal, right? If you
So
make
so
one more
yeah,
dollar.
yeah. So
Mhm.
it would be 15% of 50,000.
No, no, no,
That's it.
no. No, 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 no. Look, you have to go through every bracket. First, you have your taxable income is 50,000. So first you pay 10% of the
Okay.
first layer of your income, first layer or first bracket of your income. So
Okay.
19 for 19,050 of your, taxable income, you pay 10%, which is, going to be 1,905.
Okay. Okay.
Okay, and then the remainder will be like $30,000 roughly because your taxable income is 50K. So
Yeah.
the remainder will be about 30,000. So you pay 15% on that about 30,000,
Okay. So it's
right?
like
You don't pay,
you
yeah,
you
you don't pay
remove
at the
10%
top.
and then you remove 15%.
Yeah, 15% on that like 30,000, right?
Okay, that makes
For the
sense.
first, this is about 20,000. For the first
Yeah.
20,000, right? 10%.
Yeah. Yeah,
And
but
then
in the
the
question
remainder,
they
yeah.
say,
So, so one thing you have to clearly understand is that you're not paying at your top tax rate. You're not paying at your top tax rate.
uh-huh,
You're going through every bracket, right? You're going through
until you
every
reach
bracket.
the highest point you're at.
Hmm?
And you're paying every bracket up to like
Yeah, you're paying
the
every
most.
bracket, right? You're paying every bracket. You're paying at every rate at every bracket. And if you made, let's say, um, if you made more than 70, let's say your taxable income is exactly 77,410, 410, right? Then you pay only 25% on that $10, right? Because
Uh-huh.
you paid 15%. If your income was like that, you paid 15% for this. This range would be about 50,000, right? You paid 15% on that, 50,000, and then beyond that, you made only like $10 more than this upper bound, right? So then
Mm-hmm.
on the $10 you paid 25%, which will be $2.50,
Okay.
right?
And yeah,
Okay.
but in the problem, they say
Mhm.
use corporate tax rate of 21% for your calculations. So do I ignore the brackets and go with 21% as
What,
a
what, what
default?
did you what did you say?
In the problem, it says
Uh-huh.
for like let me read you this problem. Everybody's fitness 2021 income statement is reported below in millions of dollars. And then under it there's the income statement. And then in parentheses it says use corporate tax rate of
Oh,
21% for
corporate
your
tax rate. Oh,
yeah.
so that this is personal tax. In the corporate tax rate,
Oh,
actually, in the corporate tax rate, what you need to do is there is a base rate, something like a base rate. Um,
is it
and then
21,000?
no. The base rate will, for example, if the corporate income is like in this range, like corporate taxable income is like between 0 and 50,000. There is no base amount, but pay just 15%. But let's say the corporate income is like uh, between let's say 330, this range, right? Between this and
Yeah.
10 million, right? There is a base
Wow.
payment of this, right? And then
Okay.
plus the tax rate, 34%,
Wow.
right? On the difference between the for example, your corporate income is taxable income is 10 million, then 10 million minus this, right?
And then
Because you
and
already
then you
paid this,
tax that.
and on that
Yeah.
difference you multiply that by
Okay.
this rate. So corporate tax rate is not doesn't follow like doesn't go every bracket. Corporate, you're paying just at your top tax
Mm,
rate.
okay. Yeah.
Okay, so
So
that's
that
the difference. Hmm.
to calculate the marginal tax, I would find the range and then subtract the base price and then tax that. Correct?
No, you're talking about the marginal tax rate, not the marginal tax rate is the percentage. So, for example, if your corporate income is this,
Yeah.
right? Or not this, but let's say 10 million and one, 10
Uh-huh.
million and one. Then, um, if you make one more dollar, if you make one more dollar, it will be 10 million and two. And if it is 10 million and two, you will still, your marginal tax rate will still be 35. You understand?
Okay. Yeah.
But if your tax is exact, if your corporate income is exactly this, not exactly this, but um, currently this, then it's 34%. But you made
Yeah.
one more dollar, right? 10 million and um, uh, yeah, this is And if it is corporate tax, was the problem still about the corporate tax?
Yes, they
Huh.
they have the income statement, which
Hmm.
includes the net sales, the cost of goods sold,
Okay.
gross
Okay.
profit, everything.
Hmm.
And then what they
Hmm.
ask is determine the tax liability, the net income,
Hmm.
the average tax rate, and the marginal tax rate. So
Oh, okay.
I'm yeah. So I found online and through the lessons that to
Hmm.
determine the tax liability, I honestly I forgot exactly what it is. But like you add the EBT or subtract the depreciation and the amortization from the EBT, something like that. But the marginal tax rate, I really can't figure out how to do it. So I'm having trouble with the
Well,
exercise.
still the concept is right. Um, as long as you're making, um, uh, if you are currently, if your corporate income is this, your marginal
Yes.
tax rate will be this, right? If your corporate income is within this range, the marginal tax rate will be this, right? If you're if you're making
So
uh,
okay.
$1 more, I mean, for example, it is somewhere here. I mean, 10 million, 10 million, let's say 11 million something. Yeah, if you're 11 million something, then if you make $1 more, it will still be 35%, right?
Yeah.
As long as you don't go beyond, you don't breach the upper limit, it will still be 35. But once you
Yeah.
breach the upper limit, then it will be
You pay
yeah, 38%,
38.
right?
Yeah.
Okay.
Okay.
All righty. And
I
then
hope I
uh,
understood.
yeah, yeah. And the average tax rate is, using this example, uh, you're not paying if it is personal income tax. Um, and it's interesting. Why? Because if it is corporate income tax, there is no. I mean, average doesn't mean anything because you don't go through every bracket. You just have one bracket, right? You just pay at one bracket. And the thing is, in corporate income tax, as you can see, it's not progressive. I mean, it's progressive up to a certain point, and then after that, it goes down, right? From 39, then to 34, and then progressive again, and then back again, down again, right? But because you don't go through every bracket, there's no average. If you go through like personal income tax, if you go through every bracket, then we can have average, right? Because you will average tax rate is total tax divided by your taxable income, right? Average tax rate will be right
Mhm.
total tax divided by your taxable income, and
Total
that's
tax
why
divided by taxable income. Okay.
yeah, that would be average, look, and then another thing is, um, so effectively you are paying, since you're not paying at the top rate, so your average tax rate will be somewhere in between, right? Somewhere in between, isn't that
Yeah.
right? So you're not paying at the top tax rate. That's something you have to understand for personal tax. If your income is annual, if your taxable income is like um, uh, if you're as a single individual, if your uh, tax rate, if your disposable income is like 157,000, so you might think, oh, I must be paying 24%. No, you're not paying
Mm.
24%. It will be weighted average. It will be weighted average of all four brackets. So your effective tax rate comes much lower, comes out as much lower than the top tax rate. Okay.
Mm. Yeah.
All right. All righty.
Okay.
So back to so this is once again this is not the main lecture where collaborate session is always behind because it's excuse me because it's always a review and then um, uh, in our last class we were talking about the difference between OPEX and total fixed cost, and I told you they are not exactly the same because the focus is different. And as I said, total fixed cost is the microeconomics terminology, and in microeconomics they focus more on the initial startup capital, right? The sunk cost. We talked about sunk cost. Let me just quickly check where we were exactly last time. So you guys are, yeah, 1300, right? That was, FNB 100, section 1300, full 211004. That's October 4th, which is Monday, right? Which was Monday. So let me quickly check.
Sold. And if that's the case, then the cost of goods sold is equal. What is initial investment? Think about it. Dell is a computer manufacturer, right? And any manufacturing, if you think about manufacturing, in manufacturing, you must invest like, tens of millions of dollars, I mean, the plant will be like 10 million, 20 million, 30 million, even $100 million to build a plant, right? It's very difficult to close out the business because you have already.
Okay, so yeah, I already talked about the sunk cost, right? Remember, because the manufacturing requires huge, startup capital, right? And manufacture. So once you start a manufacturing business, there is no pullback, right? Because it's already the huge amount has been invested already into the plant. So until you recover that, you cannot pull out, right? You have to move on. You have to go on and produce, and sell the first batch of products and generate revenue. And this cannot, tens of millions of dollars cannot be recovered just by the first round of sale. I mean, it might take like 5 years, or 6 years, 8 years, to fully recover the initial investment, right? With the sufficient return on the investment, right? So that is, why total fixed cost is not exactly the same thing as OPEX, operating expenses, because in accounting they focus more on the overhead. What is overhead? Overhead may have not things like I wrote a lot everywhere. Um, and of course, that's also called a fixed cost in accounting. Let me not make it more complicated here. Like rent, utility, base salaries, right? Um, Marketing expense, R&D, research expense, these things are relatively, constant and not related to production level. Not, they are not proportionate to the production level. Hence, fixed cost. But as I said, also in accounting, of course, the fixed cost will be spread over, right? The fixed cost of the fixed cost or the sunk cost, the initial investment of like tens of millions of dollars, it will be spread over like, a long time horizon. Monthly, every month, there will be some portion of that, if it is to be recovered over like 8 years, right? All that, tens of millions of dollars will be divided by uh, uh, 8 times 12, because 12 months, or if you're on a monthly operating cycle is normally quarterly, right? So all the statements are basically quarterly adjusted or quarterly updated. But if it is month to month, if it is quarterly, then tens of millions of dollars divided by 8 times 4, right? 32 quarters, right? Over 32 quarters. So every quarter there is certain portion of the operating expense that reflect the that one over 32, right? 1/32 of the initial investment or whatever. And so actually initial cost, recovering initial cost, it will be, how long will it take to recover the initial investment? Well, we need to the break-even analysis can help. Break-even analysis can tell us, not in terms of timeline, but in terms of how many units to sell, how many units to produce and sell. So break-even analysis can tell us, how much, rather than how much time it will take to recover the initial investment, but rather how many units to sell, right? If you sell, maybe 5 million units, or whatever, 8 million units, then then the initial investment is recovered. But that can be determined by break-even analysis. So now if we subtract, right? Now think about it. When we have all the income listed, when we have identified all the income, we have found all the income, and then we have found all the expenses, in other words, direct cost and indirect cost, then the next course of action is subtract. This is the verb, right? Whenever, and I say this in every class, it's etched in our human DNA, right? Even a third grader will know by instinct that third grader wouldn't understand what is income, what is expenses, but third grader will understand that this is money coming in, and this is money going out, right? If a third grader understands, and even a third grader will understand what's money coming in and what's money going out, and if he or she understands that, then even the third grader will know by instinct that what needs to happen is subtraction, right? The verb is to subtract, right? You will have to subtract the expenses from income. Isn't that right? Don't you think even a third grader will understand that concept? Huh? Don't you think? I mean, a third grader may not understand income or expenses, but money coming in, money going out.
Yeah, exactly.
Right?
It's something from a young age.
Yeah, of course. Because it's all etched in our DNA. It's our instinct, right?
Yeah.
It's our instinct. As long as we know this is money coming in and this is money going out, we'll subtract money going out from money coming in, right?
Yeah.
Yeah, unless you have a alien DNA, maybe alien instinct will tell you to do something, but all human beings will think the same way by instinct, So we subtract. If we subtract, the result is operating income. It's called operating. It's roughly profit. I mean, if you subtract expense from income, then that's roughly considered, profit, but it's not exactly net profit yet. The correct terminology is operating income or operating profit. Okay, operating income or operating profit. Now, so here's the thing. Oh, I already wrote it there, so I don't need to. Okay. And it is also called. It's also called operating. I'll write it here. It's also called EBIT, and EBIT stands for earnings before interest and taxes. So here, you might you gotta scratch your head, if you're thinking why. Yeah, earnings before interest and taxes. That's kind of self-explanatory. I mean, it's also self-predicting, isn't it right? Because it's earnings. So we can equate earnings with profit. Oh, earnings means profit then. Earnings means profit. Yeah, earnings is another name for profit. But then is profit the same thing as income? No, it's not exactly the same thing. Why? Because income is this state. In other words, income means gross income, right? So after subtracting expenses, you shouldn't be called income anymore. It should be called profit from this point. If profit is yet, then it might be confused with net profit. So we don't want to use profit just yet. That's fine. But then it cannot be confused with profit because it's called operating profit, not net profit. Operating profit. But anyway, EBIT is quite obvious. It's already, self-explanatory. It's the earnings before paying interest and taxes. Oh, okay. So this is the profit before paying interest and taxes. So then what should come next? Next should come the interest, right? Next comes the interest. Why do we have interest? Why do we have to pay interest? Because that means we have debt. So think about it. Why do we have debt? Look, the startup capital, think about it. The startup capital was like tens of millions of dollars. Startup capital was like tens of millions of dollars. How do you think we raised that capital? How do you think, if it was $50 million, how do you think we raised that $50 million? Well, you may easily say, from the investors. But what kind of I mean, we are just a startup business. We are just a startup company, startup business, and startup business is only, has only, idea. You say, I think I talked about, how Steve Jobs started out. Bill Gates started out. Michael Dell started out. Steve Jobs, in 1977, 76, 77, he started to manually build personal computers
in a basement.
in his father's garage.
Yeah, in a garage.
Right?
Yeah.
And Michael Dell and Steve Jobs too, they all start. So why? Because they didn't have any investors. Who would invest in, because they are a big question mark. No track record. So they are a big question mark. There will be no investor, right, that would invest, tens of millions of dollars. But theoretically, the sources then. So you need to go to the bank but who's gonna lend you money, right? Bank won't lend you money without. I mean, based on just the idea. No. If you want to borrow tens of millions of dollars, then you will need to put up a collateral that is worth tens of millions of dollars, right? So in reality, it's very difficult to find an investor Uh, so so what happens is if you have a really really great idea that can really and technology that can really take off, and if it will be a there will be a venture capital and they will recognize this, and in other words the venture capital will bet on your business model and your idea. They are, but they are really taking a risk. They are really on an adventure, right? That's why it's called venture capital. Um, so they are taking a huge risk because if they invest like $5 million, and if your idea doesn't take off, then they lose, whole, $5 million. But and you may have watched the TV shows like Shark Tank. No, I I hardly watch it. I watched it probably once or twice. And what is that? It's basically um, presenting their ideas, their business model, and finding an investor, potential investor, right? And so if the investors are usually it will be just the venture capital that will invest. But let's say, although it is very difficult to find investors, let's say, just for the sake of our thought experiment, you were, in a very ideal situation, you were able to find investor, and you are able to. So your plant cost, the initial investment for your plant is, let's say, $10 million, and you are able to raise, 5 million from uh, equity, in other words, from venture capital, and 5 million from the lender, from the bank. So then that's why you have debt, right? And then if you have a debt, it's an obligation to pay interest. So you will have to pay interest. So EBIT is already self-explanatory. It tells you what happens next. Interest will have to be paid next. And then after that, the taxes will have to be paid. So after paying interest, then it's called EBIT. EBT, earnings before taxes, because interest, I has dropped out now. I dropped out. You paid interest, so I dropped out. So EBT. And another name for EBT is taxable income. Yeah, how else would you interpret it, right? Interpretation of EBT is nothing but now that's the taxable income. So then you pay taxes, and after paying taxes, now it is called net profit. Now it's called net profit or net income or EAT. EAT because now it's earnings after taxes. Earnings after taxes. Okay? So the EAT is your profit, and the profit belongs to the owners. Owners are whom? Owners are the shareholders. I mean, in this case, you are a startup business, so because you are the founder, you have some shares, but the majority shares will be with the venture capital who invested 5 million in this business, right? Um, in our example, we ended up with negative profit. This example ended up with negative profit, but it just depends on the input data. I mean, I could have made input. Obviously, we had more expenses than our revenue, our income. So even our operating profit was negative, right? So we couldn't pay any interest. I mean, so this becomes part of still, our liability, right? And then so our taxable income will just be, uh, our taxable income will be negative. But look, there's no negative taxable income. So here, and I showed you this before, because there cannot be no. Think about it. It would have to be, if the taxable income is negative. I mean, mathematically, if it is negative, it should simply be zero. right? It should simply be 0. So I would rather do it this way. I will I will I will find the maximum of either 0 or G6 minus sum of those two is, that's basically income minus expenses, right? And then it will automatically make it 0. It means, use the maximum between 0 and whatever is the operating income, right? So that way we can prevent the EBIT. Oh, not here. Actually, not here. Not here. I think I used already that here. I should use, maximum of 0, either 0 or the difference between the two. The taxable income will have to be, there can be no negative taxable income. If there's negative taxable income, then taxes can be negative. What is negative tax? There is no such thing as negative tax, right? There is reverse tax. There can be reverse tax, which is like a transfer. But there is no negative tax. I mean, if your business made a loss, if your business lost, then you simply don't have any taxable income. That doesn't make you just because you had a loss, that loss means negative taxable income. So taxes cannot be negative. That means if tax is negative, it's like IRS is paying you the tax, right? So I should have made it like this. Let Excel pick the maximum between 0 and whatever is the taxable income. And if this is positive, there will be positive number for taxable income, and there will be taxes, right? Which is some percentage of the percentage, right? And then if this is negative, then it will automatically be 0, right? And then your net profit will be then from subtract interest and taxes from your operating income, right? Operating profit, right? And then still negative, right? Still negative. That means and here we are almost out of time, so I want to bring it. This was my question when I was a graduate student. Why? I mean, why do they still continue to call, in accounting, they continue to call it income? I told you, operating income doesn't sound very, it doesn't sound very neat, right? Why is it, and net income, I mean, income, why? Because income is in gross state. Income is in gross state, right? After subtracting expenses, then the better term must be profit. It's also called operating profit. But even here, they call net income. Why? Why didn't they? They also call it net profit or net income. But why do they? As if in accounting they use the term income as if they are interchangeable, as if it is interchangeable with profit. But then does this mean this is profit? Does this mean this is profit? No, this is not profit, right? This is gross income state, and this is only revenue. After subtracting every expenses, only then you can call it profit, even roughly. So then why do they do it like that? I didn't like accounting, because they don't seem to have any, like, they didn't seem to like have any logic. Or of course there's logic, but in terms of naming, right? But later I realized, yeah, well, you can call this income because income is not only for the corporate income statement. I mean, we're dealing with corporate income statement, but if this is personal, I mean, no individual. As an individual, you don't keep income statement, but you can keep track of your. You can. There's no law that prohibits. There's no law that uh, prohibits you from uh, creating your own income statement, right? I mean, you can keep your income statement. It's just not that it is that useful. I mean, uh, for businesses, income statement is the basically source of tax. The income statement is the way to calculate your taxable income, right? And your taxable based on your taxable income, right? Corporate tax will be assessed. But in case in individual, to pay tax, this doesn't serve to pay taxes. I mean, it's not going for individual. All you need to do is from your annual income, gross income, you just subtract some exemptions and deductions, and you arrive at your taxable income. So you don't have to do this, but if you are willing to do this, why not? I mean, you can find your, as I said, you have, your annual income, or which is your salary, which is your labor income, which is like your revenue, and you have your passive income, like investment income, right? You have your expenses, like food, shelter, clothing, right? Food, shelter, clothing, which means of course, food, rent, clothing, and then heating and air conditioning, something like utility, right? And then there's telecommunications, and transportation. You can all do, and you can make your own income statement, and you can arrive also your. But then if you subtract, when you subtract all your expenses from your income, the result, in other words, the EBIT, how would you call that? In case of an individual, you don't call that profit. I mean, in case of individual, right? You don't call that profit. You don't call that earnings before interest and taxes, right? Just but you may call that income. I mean, in case of an individual, income would be more appropriate term. And if you have debt, you will pay interest, or some even credit card interest, or if you have mortgage interest rate, you will pay interest, and then you arrive at also taxable income, pay taxes, right? And then finally, whatever is left is your it's profit. But you can you call that net profit? I mean, you are an individual, not a business. So can you call that net profit? It would sound weird. I mean, it's not wrong. There's nothing wrong with that. But calling your net income net profit, that's so net income is acceptable for individual case. For personal finance, net income is perfectly all right, perfectly acceptable. Does that make sense? Right? For businesses, for corporations, calling it net income, operating income is a bit weird. I mean, still calling them income is weird, but for personal case, calling that income is perfectly all right. I mean, that's the way, that's the name it should be. Right? Does that make sense, everyone? Why the term income is still right?
Yeah, but
Retain, okay, right? All righty. So we're out of time. We're out of time. We couldn't go into a balance sheet, but uh, the quiz one is already. We won't have any more class before the quiz one. So after quiz one, we will come back to the review of the balance sheet. Okay.
Professor, do we have class
Yeah.
on Monday?
What
Do we have class on Monday?
don't we? I don't know. Is
Um,
it Columbus Day?
I don't know, but my accounting class, we don't have a class on Monday.
Then it must be because of the Columbus Day. Check the college calendar. Let me check college calendar. Um, or I may have posted it. Let's go to in the announcements. There was a posting about the holiday schedule before. Go to oh yeah, October 11th. Yeah, it must be Columbus Day, October
Uh,
11th. Monday is
uh,
October 11th, right?
yeah.
Then yeah, that's the last respite we can have, right?
Okay.
Before this last holiday we have.
Yeah. Okay,
All
then
righty,
we'll see
and
you
there will be
on
no
Wednesday.
no respite between then and November 25th.
Uh-huh.
All right,
Uh,
all right, no class on Monday. Then yeah, then on
okay.
Wednesday. See you guys on Wednesday. Okay.
See you on Wednesday.
All righty,
Okay.
all righty. Take care,
Bye-bye.
everyone. All
Bye-bye,
right,
everybody.
all right. Next one. Good luck with quiz one. Okay.
Thank
Excuse me, Professor.
All righty. All righty. I will stop sharing and stop
I have a
recording.
question.
All right. Someone has a question?
Yes, I do. Keisha Anderson.
Keisha, yeah.
Okay,
Oh.
so
Mhm.
I'm a spiritual person and I'm against most vaccines.
Oh, what do you mean? Are you? Oh, the vaccination,
I don't
Keisha.
get, yeah.
Oh, well, this is the policy. I mean, it came from the. Look. This came from the senior vice president.
I know
Okay.
the situation.
You are breaking up, so let me. Uh, uh, you're breaking up, so let me just.
I don't take cough medicine. I don't take stuff like that. So,
Well, but look, I can't, I can't enforce that, but you have to comply with the college policy because you're in. Look, do you have any other hybrid class that you have to come
not at
to?
all.
Not at
No.
all. So this is the only class?
Yes.
Okay. And we are just technically a hybrid, but we don't meet until the end of the semester.
Right.
You understand? So off the record, and besides, the final will be on Connect. So if the final is on Connect, still, you don't. We will meet only one day in class,
Okay,
and
so if
that's not even. Listen, that's not even for final. That's not even for because final is on Connect. So we
right.
don't have to take final in class. So if we meet one day on the last day, you can simply. I don't encourage this because as a professor, I don't I cannot encourage students to cut class. But if you have attended all the classes, all the sessions, you may be absent on the last day.
Okay.
You understand? I mean,
Yes.
if you are coming to BMCC and if you don't have any proof of vaccination, it will be a problem.
Right.
But I'm not telling you officially. I'm not telling you to not to get vaccinated. I cannot encourage that. You must get vaccinated, but As
No,
long as you
I don't.
are
I don't have
not coming to
to.
the building.
There's other exemptions to it. I was just saying they haven't given me an answer on my religious exemption, and then the school called and said they're gonna kick me out your class in the morning. Well, tomorrow morning for not
What do you mean?
for
What do you mean? You said you don't have any other classes. You don't have any
right.
other
I
high.
don't.
Yeah, but what do you? So you're not even coming to the building. Why? I
I
don't.
have no idea. The school literally called me this morning, like at 10
Uh,
o'clock,
so
and
well
told
then
me that
you
they're
are.
gonna remove me
Listen.
out your class, even though we're only coming to school one day.
Well, you must. Basically, you must comply with the school policy, and
I
I
mean, the
can't
school
answer.
policy also states if I need to come on campus, as long as I have an up-to-date negative COVID test and I wear
Yeah.
my
Well.
mask at all
Mhm.
times, that I can come on campus.
Listen, okay. I'm afraid this is not something I can answer because I'm
Okay.
not the one who made, this policy. So whoever you were talking with, you'll have to sort it out with that party, right? I'm only, relaying this policy to you because I don't want any student to lose their, like financial aid because of this. Okay?
Right. Okay.
If
All
you,
right. So
all
I'm
right?
gonna call them back then.
All righty. All
Okay.
right.
Thank you, Professor.
You're welcome.